You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike Tusaw from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That rockin' bit of tunage means it is time to rock out once again with the Option Block, everyone's favorite bi-weekly source for all things options related. Today, of course, is Thursday, so we're at the second half of our bi-weekly tour here, and I will be your tour guide. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network. Remember, if you guys like what you hear for this program, for any of the programs on our network, head on over to wherever you get our shows. Apple Podcasts, Google Podcasts, Stitcher, Spotify, Amazon Music now playing in that game as well. You know, YouTube, the app stores where a lot of you like to get our app, and so on and so forth. Podbeam, Last.fm, it goes on and on and on out there. Wherever you get them, leave those comments, leave those reviews so other folks can continue to discover the program. More important than ever in these troubled times. And of course, if you have a question or a comment, particularly on a day like today where we're going to open up the mailbag, make sure you hit us up. We do love hearing from you guys. Let's see who we're going to hear from on the program today. Unfortunately, it looks like Uncle Mike a little bit under the weather today, not going to be able to join us, but we do have standing in doing double duty. He put on his talking pants, so he's ready to do double the talking. He is the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmen Line Capital. Mr. Rock Lobster, welcome back to the program. How go things in the GIOVINAZZI compound, sir?
Good. It's a little breezy today. We get that October. The October breeze is our windy month here in Maine. Very windy on the coast.
Windy on the coast. Let's see if it's windy in the old markets as we head on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block, the portion of the show where we break down what the heck is trading, what is lighting up our collective tapes out there. And it seems like, Mr. Rock Lobster, all those concerns we had not too long ago, end of last week, beginning of this week, about Trump's COVID diagnosis, about him then apparently putting the kibosh on the stimulus, all those COVID worries, all those stimulus worries, now apparently in the rearview mirror because we are in the green yet again today now for multiple sessions in a row in the green. Not quite as green as we have been in the last few sessions, but still green nonetheless. Actually a rare day where the S&P is leading the charge to the upside, up about a little over 0.6, about 0.2% to the upside. The Dow up about 0.33%, and the NASDAQ up a little bit less than 0.5% out there. So S&P not being the Goldilocks today, actually in the vanguard. And of course that means our old friends in the vol space taking a bit of a break since our last program. Not a huge break, though. VIX coming into showtime is at about a 27.25. That puts it down almost 1.5 handles from our last show, about 1.4 handles. We got our old friend VVIX, the volatility of volatility. You know, vol has been moving, so that is remaining north of the 40 handle, or excuse me, the 100 handle. 40 handle will be a very different story entirely. It's up about another handle and change from last show, about 1.25 points from last show. So remaining stubbornly north of the par level there. And our old friend VXX, after holding off, after fighting, after resisting the erosion for a little bit there, now giving up the ghost, down about 1.2 handles to a little bit north of 24. Coming into showtime. So a lot to unpack there. Mr. Rock Lobster, we'll start with you. What is lighting up your tape? I have heard some rumors that our old friend Volman has made a return as well. So what's lighting up your tape, the tapes of your crazies and the pitch chat, and what's Volman up to these days?
Volman isn't doing anything because there's no vol. There's a lot of vol, but there's no vol movement. So he's kind of on a hiatus. I think I have, what do I have? I probably have maybe 20 VIX contracts on right now.
Volman doesn't get a hiatus. That man's got to work 24/7. There's no breaks for Volman.
I have almost no VIX on because we ain't doing anything until the election. I think there was some opportunity, earlier. I think there's more opportunity just in SPY or, SPX. I try to stick with like vol products and SPX mostly. Besides, those are the main focus. But we have we're still at 27. And as far as the market goes, it feels like the market seems to be warming to if you believe the polls, a total flip in the House and the Senate. And Biden and Kamala Harris will be president, vice president, and on we go. We'll see what happens. So I think at this point, it doesn't bother anybody. The only reason the vol is this high is because of, everybody, whatever people think is going to happen on election day if we go banana republic or not. So besides that, some sectors are making rebounds off of deep lows. So there's a little bit of talk of that. In the pitch chat, some interesting stuff like some of the therapy stocks are doing pretty well, like Regeneron and Eli Lilly. Those were points of interest. Also kind of like old economy, like General Motors, stuff like that. Mark had a few good ideas in the pitch chat with those type of stocks. So, yeah, I mean, the Qs are 281, so they're still up there. The SPX is almost 3,500 again. So apparently the stock market is looking at something that does not have the COVID written all over it. But and I don't think we've had really any good COVID news. Like Europeans have like the amount of cases just keeps going up, but I think the death rate is going way, way down, like precipitously low. And we had the drama of Trump, getting it and then surviving, kind of miraculously surviving, to be honest. I mean, he's there, he had it. He takes the Regeneron antibody and he just pops back like the Energizer Bunny. So, I mean, I understand, and maybe too from that, there's a clear, there's a bifurcation, like people that have, that are more susceptible and old and very sick already, like they definitely have to worry about it, but most everybody else does not. So, it hasn't changed vol a lot, but VIX is lower than it was, and the S&P 500 is higher than it was last week. So, I mean, from that point of view, I think we're starting to look at the numbers a little more soberly as what's possible, and when the lockdowns are going to end. Because if a guy like Trump can bounce back that fast, and those therapies are available, even though I think he took an experimental therapy, sounds like he just didn't give a damn and he just took it. So, he's the president. He's like, oh, the hell, I'll take it. It'll be good for me. Doctors say to take it, I'll take it. And so, like, you sit and you look at this and you're like, well, where are we with this now? And how should we be moving forward? And I think it might be too late for the Trump presidency, but, at least there is a positive way to kind of just sort of push through all this. So like vol has adjusted somewhat, but it just has not adjusted from the election premium. And I think on the show a couple of weeks ago, I said, you look at that straddle, the at the money straddle in SPX is still pretty pricey. Like it was trading. Let me see, the November 4th. They are taking some vol out of it today, I think. And funny, after every debate, the vol has gone down. So I think in that way, I would guess that the Biden-Harris ticket are kind of outperforming, right? Because of less vol, people aren't as worried. And you're looking at, it's still $180 for the No 6 straddle. So that straddle is maintaining its value, and right now it's at a 24 vol. So, I mean, if you're looking at this and looking at VIX, that's kind of what your eye is keyed on to how that stuff is priced. And if there's really a big drop in the value of that, because people are worried about what's going on after the election. So at the money in No 6 is a 24 vol. And the at the money for next week in SPX volatility is only a 19.5. So that's kind of why you see this funky vol curve. Got a lot of vol back there, not as much vol up here. So you kind of have that weird kink when it tries to read forward value for the SPX. For all the months that are involved in the futures anyway. So we got that. So there is some interesting stuff going on. There are some potential vaccines also that could come out between now and the election. I think there is a lot that's sort of baked here. That's why the vol's higher. And to be honest, I think the vol's higher because it's pricing both directions. We get a vaccine. What would that do, right? Supposedly we have a Chinese vaccine, which nobody seems to talk about too much. We got a Russian vaccine, which nobody seems to talk about too much, because I guess nobody in the U.S. has taken them. But now we have the potential of a few drug makers coming up with something in the next month. So again, it might be too late. But as far as equity prices are going, we're going to see earnings coming out. I still can't believe they're going to be that great, to be honest, especially given where stock prices are. So, I think there's just a lot of cross currents, but I don't think vol is a super interesting trade right now between now and the election until something surprising happens. It certainly could happen. And, I'm not the only person that thinks the vol probably should go down by, late November before Thanksgiving. And there has been a pickup in the downside for volatility in that part of the cycle. So it's getting a little more interesting out there. The fact that the vol could get a little bit lower, like a post-COVID break, like a lot of things could happen. We could have an election, you could have vaccines, and the November cycle will not look like anything like it looks currently right now. It could be massively different. You could maybe have a 16 VIX. It's certainly possible if everybody decides, hey, we're just going to deal with it this way and move forward. So all of those things are possible. But again, it's all just basically I think we're totally event driven. We're totally news driven. And that's what we got. So as far as the Pit Crazies chat in the chat go, just looking at individual names, there's a lot of pretty decent momentum once some of these sectors pick up. Right now, oil is starting to pick up a little bit. Airlines seem to be stuck with whatever Nancy Pelosi and Donald Trump are arguing about right now. And that's kind of where I view things currently.
Lots certainly to view out there on an Uncle Mike type of day. So certainly would be a good day to have him on. A lot of green on the screen. Let's see what's lighting up the tape out there across the broad indices and indeed across some of your favorite single names as well. Let's start in index land. VIX just can't seem to catch a lift out there. 173,000 contracts on the tape right now. The ADV is just plummeting. It's down to 338,000 contracts. This is normally what we would see, in a quiet dog days of summertime when everyone's on vacation in a non-pandemic year. And now we, of course, are in a pandemic year. We are heading into the throes of an election less than a month away. You would expect to see a little bit more vol paper on the tape probably, and yet we're not. That ADV has been trending in the wrong direction from right around 400K not too long ago. Now it's looking like it's threatening 300K to the dark side. Of course, 1 or 2 crazy more days could change that, but still not exactly trending in the direction you might expect given everything else we're seeing out there and everything that the rock lobster just laid out on the vol surface there. SPY doing a little bit more paper, about 1.75 million contracts as of a few minutes ago. The ADV, a little bit north of 4, about 4.2. The S, 462,000 contracts. The ADV, just a little bit north of a million, 1.07 million. The Qs closing in on 500,000 contracts. The ADV, about 1.25 million. And small caps on fire today. IWM just on fire. By the way, if you like yourself a little bit of small caps, stay tuned. We're going to have a deep dive into some research going on there. Interesting cutting-edge stuff coming out of FTSE Russell. Coming up in a little bit on TWIFO, going to talk about the impact of COVID, going to talk about what's going on in small caps versus large cap, all the things you guys like to talk about, the vol, all that good stuff, and a lot more. Today, we're seeing small caps, IWM at least, up nearly a full percent, so leading the market to the upside, also leading it in terms of percent of ADV, because it's pretty much already at or right about a day's worth of volume. The ADV is about 532,000 contracts, and it's at about 520 right now. So a hot day in small cap land. So remember, stay tuned for TWIFO in a little bit. If you're listening after the fact, just hit next on your device of choice, wherever you're listening to this, and TWIFO will be there waiting for you. Let's see what's waiting for us in the top 10 here today. Mostly the usual suspects with the exception of a few here, like number 10 here, which is actually, let's go back up here and get the number. There we go. It's Boeing, our friends across the street. Boeing with 178,000 contracts. So yet again, the rumors of the return of their Wednesday barbecue driving paper flow. Yet again out there in our friends across the street. Number 9, telephone, old school telephone. Bit of a newcomer to the top 10. Don't see them breaking in through here very often. Yet they're doing it today to the tune of 183,000 contracts. Number 8, good old Softy, still in the top 10 at exactly 200,000 contracts as of a few minutes ago. Number 7, Baba, back in the top 10 as well, 240, closing in on 250,000 contracts. Facebook, number 6, 245,000 contracts. Then we jump up again to the 300K level. Then we're getting to electric car territory. Number 5, NEO, 336,000 contracts. Number 4, American Airlines, back in the top 10 as well, 357,000 contracts. Number 3, perennial top 3 these days, AMD, just on fire. All the craziness going on out there in the chip side of the space, really driving some interest in them. 435,000 contracts on the tape for them. You know what number 2 and number 1 are. Just a question of the order. And yet again, it is Tesla numero dos with just a tick over 500,000 contracts. That means it's Apple in the driver's seat yet again. 849,000 contracts. I guess maybe this would put the lie to the question of, splits can kill volume, and also splits, maybe we need a mini. Well, this, I guess, effectively brings some of that mini to it. But they were doing good paper before the split. They're just doing more now. So maybe we do need minis. I think we'll get to more of that. I think you guys had some thoughts on that in a little bit. Certainly you did last show on all things return of the mini. But before we get to that, let's get to what's been popping off this week and indeed this past month out there in all things options. You know, I joked about it before, but people have asked us for a long time, what would it take to really topple the record that was set back in 2018 for overall options market volume? And I said, probably nothing good. Probably something really bad. And look what it took in 2018. We needed multiple systemic shocks, including the vol-apocalypse, VIX-mageddon, call it what you will, of February 2018 that melted down the market, exploded VIX, and of course took out a lot of products along the way. We saw another big moment in October of that year when we saw the worm turning there pretty aggressively, and a bunch of other interesting and not really beneficial things for the broad market and the broad economy throughout that year that really drove a lot of record volume. So we knew to top that, it would have to be something quite literally earth-shaking, and we pretty much got that this year with the pandemic, followed by civil unrest and everything else like that. I guess the silver lining to all of those horrible headlines is that it's translating into quite a bit of options paper. September volume was 670, almost 671 million contracts. That's up 65, almost 66% from this time last year. Of course, this is from our friends over there at the OCC. And that also means it was the highest September ever. And more importantly, more interestingly, it brings the total cleared volume for the year to 5.4 billion contracts for 2020. In case you're wondering, It's September. They've already beaten now the record for the year for the options market, which was set back in 2018. Mr. Rock Lobster, did you ever imagine in a million years? You might think we would probably beat it. Maybe we'd squeak by it at the end of the year in another tumultuous year. Did you ever think we'd have a year that was so crazy that we blow the doors off 2018 by September, sir?
Well, I couldn't have guessed about the pandemic. So just for listeners, I'm now feeling so old that when I started, relatively when I first got my feet wet.
So ADV was like one a day, maybe two back then.
And like the exchange volume on the P Coast. Okay, when I started, a big day was 100,000 contracts. I think Apple itself trades 100,000 contracts in about the first 30 minutes of the day now. Just one product. So it does not. And to be honest, I think options are a great business. It's always been good to me. And I just see, especially like growth of Robinhood and commission fee trade. Like I just don't see the growth stopping as long as we don't screw our system up too bad as far as option trading goes, and people would be able to write calls in retirement accounts and stuff like that, where you don't have to worry about the taxes. Like there's all kinds of smart ways to use options for people. So I think, as they learn, obviously I'm in the education business. I think that's a growth business, but people are learning how to use these things to help them try to make money and manage risk, which is kind of what they're, designed to do. You could also go crazy with them if you want. I don't recommend that. But there's a lot of opportunity. So, but you were right, of course, prescient as always that, yes, it will take some earth-shattering thing to beat 2018. And lo and behold, the good Lord invented it for us.
Yeah, it was very literally a case of careful what you wish for. I remember, I think, literally saying those words at some industry events early last year, I believe. And lo and behold, I wish I was not right, but we are. So let's look at the silver lining. Volume, just insane. By the way, if you're wondering what the previous record was, it was about $5.25 billion cleared during that tumultuous year of 2018. So yeah, we're already well past that, closing in on 5.5. I'm sure by now with this week's volume and everything else, we're probably way past that. So yeah, just crazy time. Let's see how these numbers break down as we like to do here. Overall, remember, OCC clears other things, not just options. It's mostly options, but they clear other things. So let's strip out some of that. Let's get into the options. Specifically, exchange-listed options, 666. What an appropriate number for 2020 million out there. That's up 66.5% from September of last year. Drill down a little bit farther. Equity options, that volume was 632.7 million. So you guys like yourselves some equity options. Go figure. Up 75.5%. I mean, these numbers are just off the charts here from last September. ETF options volume, that was up 42.1%. That's 218, almost 219 million out there. Index options, that's another area where it's been kind of flagging, even though everything else, is on fire. And index options, yet again, in spite of the fact that we're seeing record numbers out there, index options volume with 34 million, almost even. That's down 14.5% from last September. What's going on out there? Obviously, the S is in some turmoil. The S is a big driver of that. And we're still seeing, volume having a hard time returning to this kind of hybrid pit out there. And that's reflected in these numbers. Even in this crazy time, the S can't really turn it around. OCC year-to-date ADV, 28.6 million contracts. Just staggering numbers here. Let's see. Futures as well. Futures, of course, they clear VIX futures over there in OCC land. Futures cleared volume, 4.2 million contracts. That's down again. This is just another thing we've seen throughout the entirety of 2020 here. Almost 30%, 29.2% decrease from September of last year. So the futures have yet to recover as well. Not just from all electronic and all that madness, but from what happened in 2018 when a lot of these ETPs got wiped off the board that drove a lot of their volume. They're still hurting from that, and we haven't really seen a turnaround out there at all. So crazy times out there. Let's see what we have on the tape in terms of upcoming madness. If you like yourselves a little bit of micro madness, a little bit of earnings, it's kind of winding down right now, but don't worry. It kicks off again in about a week. So we're right back into it Coming up, let's see what we've got on the table here. My favorite, we joked about this in the past, Helen of Troy. They're popping off this week on Thursday. We joked, what the hell did they do? It was an ongoing joke we had on the show here for a while. Paychecks on Tuesday, Levi Strauss on Tuesday. Wednesday, we've got Saratoga Investment Corp, everyone's favorite, Expo Inc., and Resources Connection. That's a management, so we're kind of getting the dregs there. Thursday, Domino's Pizza, been blowing it off of late, so probably going to see a good trend there. Carnival, one a lot of people have been watching as well on Thursday. Our old friend Helen of Troy. So let's look really quickly. We do have some earnings reports still, some fresh ones still coming as we wait for the onslaught of new ones to come to kick off next season. Let's wind down this season. We've got Domino's here. Ticker symbol DPZ, Domino's Pizza. Let's see, this report is hot off the presses, coming in right before showtime. And they were actually, this is actually a results report because they were popping off today before the bell. And let's see, at the time of this report, we got some movement out here. Domino's was a pretty lofty $431. And they were pricing in 5.6%. Did we get some pizza vol? Spoiler alert, yes, we did. Big vol move, actually nearly 8%. So as we wind down the season here, it seems like we're getting a little bit of some vol craziness to wind it down, which is good because the season needed it. Otherwise, we had a pretty crazy anemic vol season. So for right now, Domino's, it was at 397 in the third. Now it's at 403.5, down 6.5%. Still outperforming that straddle out there. Let's see how low did it get. That level actually at it's like about 395 and change. 395.90 is about the low of the day. So substantially lower here, talking almost 8 handles lower than where we are right now. But interesting stuff out here. Domino's Pizza, Mr. Rock Lobster. Who knew it? Who'd have thunk it? Pizza Vol was the name of the game, sir.
Pizza Vol, and have you checked on the price of a Domino's pizza lately? Okay. A pizza and cheesy bread is like $25. So I think Domino's took the pandemic and decided to raise all their prices 20%. I don't blame them because I guess they didn't have a choice. Probably everything got more expensive during the pandemic. So, they're bringing in the bacon. So, or should I say pizza? But you're looking at it and they're like, wow, these companies, Domino's actually makes pretty fair bit of money. So the fact that we're kind of now pushing through the COVID. People are sort of getting a little bit more back to normal and just not eating pizza every day. I think it might be sort of a little bit of that effect. But still, they didn't quite perform as well as they thought. I think there was a pretty lofty earnings number in there. But still, they're still selling a heck of a lot of pizza.
They are indeed. They're selling themselves now, it seems like, as delivery experts are bringing other types of pizzas to your house, like cheeseburger pizzas and all sorts of fun stuff out there. So interesting stuff out here. Let's see what else is interesting. Let's break it down really quickly here because the season is pretty much winding down out here. It does seem like a little bit of these recent upticks have helped lift it a little bit because now we have more analysis in the rearview mirror, and it does seem like the season has ticked up. It was languishing at about 72% in terms of actual merited movement versus how much movement was being priced in. That has ticked up now to about 93%. That's a pretty astounding increase. Looks like they may have adjusted up some of the previous weeks, like week 4. That was a lot lower. Now it's at 102%. So I'll have to talk to Matt about what happened in that week 4 now. That seemed to have lifted up the whole season. But still, you can check it out for yourselves. Earnings move results, earnings season reports. And guess what? We got some hot names coming up in a little bit, too. So all of next week's going to be kicking off again. We'll get to that in a little bit, maybe on Around the Block. Now it's time for us to get weird, to get wild. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's get into it. Hot and heavy out here, a little bit of weird, a little bit of wild, a little bit of whimsical. Yep, it's time for the Odd Block. I love these kind of just come in hot and heavy from our Eye of Sauron, where we unleash it send it out into the world, and it brings us back fun stuff. We can read them live here on the show, kind of parse them on the fly. First off, you got an old offender here. It hasn't been on in a little bit. This is MRVL. Not Marvel, that would be cool. Talking about Iron Man and Cap and whatnot. No, we're going to go MRVL Technology instead. Ticker symbol MRVL. Trading almost $43, 42 and change out there. Up about 40 cents on the day. This is the name that's had an interesting year, actually. A year ago, it was trading about $22, almost $23, and obviously it's had a nice rally, pretty much $20 over that time frame. Didn't really seem to suffer too badly either in the great nadir of March. It only got down to about 16.5, so not really bad at all. And then it pretty much never looked back. Within a couple of weeks, by March 26, it was trading 23 again, and it kind of just took off from there. Hit 36 right close to our typical apex, which is June 8th. But this one actually kept going through it, unlike most of the small names we profiled here on the show, or I should say smaller, really. And then, of course, hitting its recent high, looks like again today, right about $43 out here. So an interesting run over the course of the past year, up about $20, and not really pausing much at all during the great panic sell-off of March. Let's see what our Eye of Sauron found out here. Given this chart, this doesn't really surprise me. Looks like Mr. Rock Lobster. We got some old school odd block call love to the tune of the October 45. So we're at about almost 43 right now, listeners. We got October 45s coming out today, opening 13,626 times for 58 cents, pretty much lifting that offer over there. I believe this is on the MyX Pearl. Let's see, this is not an earnings play because the next earnings is on December 1st, so quite a bit away from these. This is, by the way, an applied vol of pretty much exactly 50%. Interesting out here. So Mr. Rock Lobster got pretty much 4% out of the money calls going up in MRVL for 58 cents. OC45s, 13,626 times. Seems like somebody thinks the party is just getting started out there in MRVL. Is that your case, sir? And if so, what do you think of this trade?
And I believe this is MRVL, as in some funky tech company, not Marvel, the creator of comic books and all those little figurines you have to put all over.
No, not Marvel. No Captain America and Iron Man. That would be cool. Iron Man does dovetail into the technology side. You can talk Hulkbuster and stuff, but no, we're talking Marvel instead with two L's and demonstrably less fun, sir.
Demonstrably less fun. Okay, old school OC45 call buying, huh? MRVL. They want. It's funny. There was a lot of call buying this morning. I have to be honest. Like in a lot of the drug companies, a lot of the therapeutic companies. Although this is not one of those. This does look like. I just want to say, do we have a? It looks like it was okay, we're going to hop in the morning, we're going to pile into this one, and then, meh, I think. Let's see here. They're buying the 45 calls, and they're currently trading for 35 cents. So, 24,000 contracts, it feels to me like that's some sort of newsletter. Hey, this is a sweet buy. Pick up some, blah, 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 and then the stock just becomes sad. And they're actually still buying them. They're paying 24 cents for them. They're buying some of the OC943 house. So there might have been some news in here this morning, Mr. Longo. I don't know what it was, but whatever it is, it has petered out. It has petered out by midday today. So, I was trading 43.5, and now it's kind of got the sads. So all of the excitement has gone out of this one. Maybe we'll see it on a Robinhood report tomorrow that people were jazzed on it, and now they aren't.
Everyone thought they could buy Iron Man calls, and they were very deeply disappointed when they found out that was not the case. But you're right here. This one was doing some more paper. It looks like the OC45s have done a total now of about 24,000, so another 10,000 or so pouring in after our big chunk here, our big trade here. Also 17,000 of the OC43 halves. So interesting stuff afoot out here. Obviously, something was up out here in MRVL today. It might be a newsletter. You're right. That'd be a weird one if it was the 43 half, 45 vertical. Of course, we've seen weirder out here. Also, the ratios don't really lineup. I didn't see any news. I'm able to come back to it a little bit. That's just fun about these live ones. We kind of have to digest them on the fly. Sometimes our listeners are keen ear and they know what's up with some of these names. But fun times as we keep on rolling to the next name. Now it is time, listeners, getting away from Iron Man and the Hulkbuster, and let's unleash the Huns. Ticker symbol Hun, at least. This is Huntsman Corp. This is a chemical manufacturer out here. They make adhesives and polyurethanes and all sorts of fun chemical things like that. Let's see. Ticker symbol Hun, HUN, trading about 24 and a quarter right now, up about 20 cents. A year ago, it was trading 21 and a half, so a little bit shy of where it is right now. Then we saw the Great Nadir come along, and they got down to 12 and a quarter. This one took the heat a little bit, unlike our previous name, MRVL, there. And it kind of languished there for a little bit. It wasn't really until the end of April where we saw it kind of rallying back up to 16 and change. And then it sold off again. One of these ones that kind of had a couple of false starts after the big sell-off. And then it rallied back up again. Guess when it peaked? June 8th. Yep, 1990. Then it sold off pretty hard. And then about a month later, July 10th, it started rallying again, and it finally broke that June 8th level on July. So we're starting to see a few names break that plateau of June 8th. Not many, but a few here. And this one now has obviously trended higher. Got as high recently as 24 and change, 24.02, before selling off again down to 21 and change. So it got a little bit of the wind taken out of its sails. And now turning right back around and rallying again, right back up to 24 and a quarter. So interesting stuff afoot out here. Pretty close to the high out here. Not quite, but pretty close out here. The high is pretty much 24.90, so we're threatening it right now. Let's see what our Eye of Sauron found. Mr. Rock Lobster, did it find more call love? Did it find something else? Oh, looks like maybe it found one of your old favorites, Mr. Rock Lobster, the old line in the sand puts to the tune of the Nove 21 puts. So we're at about 24 and a quarter right now, listeners. So decently out of the money, decently out a little bit. November 21 puts for 40 cents. These were 35 cents at 40, so they didn't have to crush the bid. They actually got it done a nickel better than the bid for over 4,000. So that's mildly impressive, I suppose, given how strained the markets are these days in terms of liquidity. Let's see, the stock was, 24.36, so a little bit higher. Not much, a little bit higher when these went up. This is about 13% out of the money, and there are earnings within this cycle. They are October 29th. So Mr. Rock Lobster seems like someone perhaps drawing a little bit of the line in the sand at about 3 1/4 points below where we are right now, getting a nice 40 cents to do it, and also looking to ride the storm through an earnings cycle. Is that your takeaway as well, sir?
Actually, we got a listener request about the line in the sand stuff. Just for, this does have all of the hallmarks of a line in the sand. Let's see. Let's evaluate, shall we?
We have a listener. Is this one of your listeners who sent this request?
One of the Twitter files. It's FTP Philip Contango. He was acting. You'll recognize his handle when you see it. So this is a Huntsman Corp. Is a chemical company, old school, like old technology. Industrial. I will call old economy type stock. And I'm looking at like the chart here, like for the last 6 months. So actually, this company has been doing quite well. I don't know. Do they make plastic? And maybe they make PPE for all the COVID stuff. But this actually company has fared pretty well. Like where they're selling like the 21 put, which definitely looks line in the sandy to me. That was the recent low. It looks for sure like a line in the sand put. Nowhere near the kind of COVID lows of like $15. But I think they'll take their $21 and they'll take their 2% and go along happily is what this looks like.
Does have that whiff, does have that air about it, sir, as we move on into our final name. By the way, we're going to come back to both of those. We're going to put both of those in our to be watched category, the Marvel calls and the Hun puts. I just like saying Hun. Move on out to Switch. Not the Nintendo Switch. That also would be quite fun. But no, this is Switch as a telecommunications company. They run data centers out there, looks like in Nevada. And ticker symbol SWCH, trading $16.18, up 18 cents today. Let's see. A year ago, this name was trading about $15.50, so not a huge move from then to now. It topped out right before the Great Nadir at about $17.70 or so, and then it sold off pretty hard. Let's see, down to 11. Actually got down to 10.30 intraday, so rough time there. But this is another one that didn't hang out there for too long. People quickly realized, hey, might need some data. Maybe we should pick this one back up, because within a couple of weeks, it was traded by March 30th. It was trading almost $15 again, and by the end of April 27th, it was trading nearly $19. So it had regained all of its former glory and then some by the end of April, and then it topped out. And this one, weirdly enough, not on June 8th, but actually on June 1st at $19.11, and kind of sold off again pretty hard down to 17. It kind of languished there for a while, and it sold off again recently down to 15 again in September. So someone not liking what they're seeing out there, and now slowly trying to fight its way back up to where it is right now at $16.18. Let's see what our Eye of Sauron found out here. Oh, Mr. Rock Lobster, looks like maybe somebody fading a little bit of this upside love. We've gone out to February now. February of 2021, 18 calls, going up 3,000 times even. For 85 cents, that was the bid. Someone crushed it 3,000 times over there on, I'm not sure which exchange this is, maybe the box. These, of course, are opening. All of our trades are opening. The stock was about 16, 18 when it went up. If you're wondering, if you can't do the math, about 11% out of the money. There are, of course, going to be earnings in this cycle, and the next one is on November 5th. So probably have a couple here between now and this expiration. Mr. Rotloff, looks like someone giving up the upside and doing it for 85 cents. They're getting almost 40% vol for this, so not a bad sale out here. And given what we've seen on this name, it topped out at almost $20, $19.99. This is not a bad level. Looks like someone thinks maybe the near-term upside a bit muted here for all things Switch. Is that your takeaway as well, sir?
It has that. I'd say it has that whiff, but it's like. Personally, I hate selling calls at growth stocks. So that's just because it's just, I guess, in an IRA or something where you don't have to deal with the taxes and the roll and all that kind of crap. I think it's fine. But growth stocks, I mean, it's not a super volatile stock too, so I can see why they want to do it. But I mean, I guess it's an okay buy, right? It's a yield play for a couple of weeks. It's reasonable. I'd say it's a reasonable buy rate. That's all. Nothing super fancy, but a way to grab a couple of bucks.
It is indeed quite reasonable. Let's see if you guys are equally reasonable, because it's Thursday. It's time to open up the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Let's see what we got in store for the mail block. I'd like to kick it off with some love. This one, I'm not sure if we did this one last time. Looks kind of familiar, but even if we did, whatever. Let's get it in there again. It's so hard to keep track. You guys have been throwing a lot of reviews our way. We do appreciate that. Like Frank here from Google. He gave us a 5-star review. I do believe this might have been in the App Store for our app. If that's the case, if that's how you want to do it, have at it. However you want to do it, keep those reviews coming. We like 5 stars. If you want to knock off some for the Rock Lobster, we won't hold it against you. He says it's a solid learning experience. They provide a great service. Thank you very much, Frank and everyone else out there who took the time to rate and review all shows on all the different platforms out there. We don't ask for much. We're not out there asking you for other stuff. So if you like what you hear, leave those reviews. It's more important than ever these days to help people cut through the clutter on the ridiculous number of podcast outlets out there now. You want to help us rise to the top. We are out there. We've been doing it for a long time, so that helps. We have a strong track record. These stores tend to like us, but the reviews always help as well. So keep them coming wherever you like the show. Next up, we've got Hungry for FA. Financial analysis, fiscal autonomy. Who knows what he's hungry for? But Hungry for FA wants to know, I have a question regarding unusual options activity. Well, you came to the right place, FA. Says they are not hard to spot, but knowing if they were bought or sold is tricky. He puts in parentheses, at least for me. Well, let's assume that volume is greater than OI. So that's an opening position. Okay, it's a good starting point. He says, obviously, if it is filled at the ask or bid, that makes it easier. What do you rely on? The option price that minute, stock price. What is your most reliable indicator? Inputs much appreciated. This is obviously what we do all the time here on the show. And you're right, it's not easy. If it was easy, everyone would do it. But you're starting in the right place, which is, of course, looking if it's opening. We don't even touch a trade usually if it's not opening, because if someone's just closing out a call position and rolling it somewhere else, that's not really that exciting for us and not that exciting for our listeners. That's kind of our first level basic criteria that our Eye of Sauron looks for is make sure it's opening. And then beyond that, now you're right. Now you're starting to get into some of the minutiae. A lot of the ones we talk about here, these markets are crazy wide, and this thing is going up somewhere in the middle. And that's where it gets a little bit. If they're lifting off or hitting a bid, you're usually pretty safe, unless that bid is kind of funky, and unless, something has gone up late, that's something to look for. If something's gone up late, you've heard me mention on the show before, take the execution with a big grain of salt, because you don't know where the actual underlying was and where the market was when they printed it. So it could have been the offer, and now they're saying it's a bid. So that's why we always say bear that in mind. And then also with a lot of these names out here, look at, like we just did this with one of the earlier names. Like we were talking, I've got the name of the ticker already, but one of the earlier ones we're just doing. Initially we just talked about the 13,000 that went up, that was opening clearly in the MRVL calls. That's what our Sauron found. But if you dig a little bit more, we saw a slew of more, about 10,000 or so more going up. And that's also interesting to watch, because that's how they've been going up in what size lots. Maybe that big print you saw was actually reflective of someone parking an order in the book to kind of mess with those numbers. It looks like it's, someone hitting the bid, when in reality it's a bid that was parked there much earlier in the day. So a lot of things can go up to kind of obscure that. So do your due diligence, scan for the opening, scan maybe for size, look at where it's going up on the bid-offer spectrum. You're doing all the right things. Now, you've heard us before also mention things like the implied vol. Now, that's not always a sage indicator either. Other things can change that. The underlying movement can cause the vol to come in or vol to increase. What's going on in other parts of the skew can cause that vol to change. It's not always reliable, but if they're crushing 20,000 of something on a strike and, you're probably going to see the vol come in a little bit. So that's usually, if the vol is coming up, then it's mid-market, it's going to make you kind of question that a little bit. So vol is always a good indicator as well. But a lot of times there is a little bit of art to the science out there, hungry for FA. It's something you have to kind of just learn over time. Luckily, we've been doing it for a long time, so we can kind of do this stuff on the fly. But if you're new, I think start off with those basic tips and then kind of roll from there. Maybe you'll find your own secret sauce that works for you. Mr. Rock Lobster, obviously you've been doing this for a long time as well. What do you have to say here for hungry for FA? Maybe he's hungry for falafel. What do you think?
Well, hungry for FA, I was trying to figure that out. I thought it was some sort of financial analysis. But knowing they're bought or sold is tricky. Let's assume that the volume. Okay, so I remember. Okay, this one, and it's so. The easiest thing I learned when I first started is it adding or subtracting liquidity. So usually, there's you remember there are several when we did that sheet about showing people about all the ways that they put up these blocks of options. So the interesting way is if it's crossed, that usually means that like an institution is just taking the other side because there may be a premium writer or something like that. But as far as, when you see a lot of activity, is it really moving the ball? Like, what was because like I use live ball and they have a pretty good historical tick. Their historical tick by tick data is very good. So you can get a little idea of where the options were trading the day before and where they're trading now. So, and usually what happens, every option has a delta. So if you see a call that's trading $1, let's say, and the delta is 25, you expect the option to move around 25 cents per $1 in the underlying. But if you see the option moving significantly more than its delta from the day before, usually that's volume accumulating that strike, usually for a reason. What I would do is, my trick on a lot of this stuff is, especially if the stock has just had a bit of a move, I try to create a strangle around the last move. So if the stock is just up $2, I want to lean long because people think it's going up, so I'm not going to doubt that. But if the stock does pull back, my strangle at least breaks even on the $2 move. So I try to price, if possible, break even if it goes the wrong way, but make a bunch of cabbage if it goes the right way. That way you can adjust the types of the strikes that you buy. You don't have to buy the strike that, paper is pumped up at a higher vol. So, sometimes that opportunity is there and you can kind of ride the coattails like that, at least for a couple of days with relatively small premium dollar risk to the return that you think you can get if the thing is going to pop. And then you just write it. And then, if the put goes out worthless, but the calls make a lot of money, that's a good thing. So I know some people don't like that, but I would rather just not lose a lot of money if I'm wrong and make a little less money if I'm right.
Always a good thing. You like making cabbage. I prefer to make money, but hey, whatever. Maybe that's currency over there in the land of man. It's a good point about the cross, by the way. That also is something else that could come in and obscure things. You're going to see a lot of times now, listeners, a crossed tag going up telling you that that's crossed. Now, your first blush could be, hey, they found a counterparty for this, so maybe someone's taking the other side, and that is technically true. But that doesn't always mean that other side has the opposite economic intent as the customer. Often, if it's a large customer, some of these desks will step up and make the order good for them because they want this customer to get filled, and the desk will find a way to trade out of it down the road. Doesn't mean they have the opposite economic viewpoint. So take that with a little bit of grain of salt. Oftentimes, if it's crossed, there is another counterparty they found, because brokers, hey, they like to get paid twice, right? What's better than getting paid once? Getting paid twice for the same trade. So they will actively seek counterparties, and those are more important now than ever in this fragmented liquidity environment that we have. But it doesn't always mean that the other counterparty has the opposite economic intent. Just bear that in mind out here. Let's get up. Got good handles here on the show today, Mr. Rock Lobster. Next up, we have Ticker Talker. Bit of an interesting one. Let's see. Ticker Talker says, hi. Well, hello, Ticker Talker. Says, not sure if you can help me. Well, we will try. He says, I have a quick question. In the same account, if I write 2 covered calls on a stock, and then a few days later, I buy 5 calls of the same stock at the same expiry date and the same strike price, will I essentially end up with 3 calls of the stock because the 2 on the right side and 2 on the long side cancel each other out? Or should I be able to maintain 2 sold calls and 5 long calls of the same stock with the same expiry and strike price? Thank you in advance. I'm not sure why you'd want your broker to delineate it that way, but most good brokers worth their salt. Even if you forget to tick buy to close, they will know you have this short position on, and they will mark 2 of those buy to close for you. If you have a broker that somehow does it, leaves it short 2 and long 5, I would get the heck away from that broker pretty quickly, because clearly they're maybe not that savvy in the world of options. But either way, it doesn't really matter. You're still net long 3 at the end of the day. However you like to look at it, that's what your position is. That's what your actual risk is net long 3. I don't know, Mr. Rock Lobster, can you think of any scenarios where or a broker that would do what he asks, leaves him short 2 and long 5?
I think they make you close the 2 contracts. I can't see a scenario where they don't do that, to be honest, because ultimately you're only long 3 contracts because you just closed 2 of them. So I don't know what else to say there on that one.
Yeah.
Sold it and bought it back. That's all there is.
I love our listeners. They sometimes ask interesting ones. So yeah, unfortunately, the answer is no there, Ticker Talker, with your interesting request. Let's wrap it up here with Tony. I think this came in our live chat last week. This is about our discussion on the minis. Everyone was super jazzed about the return of mini options on the show on Monday. Tony asked, would the mini options hurt the volume in the main underlying option, thus making bid-ask spreads worse? So that was kind of the concern around weeklies, right? Once weeklies started taking off, everyone thought, well, they're going to cannibalize, and they did. A lot of the front-month volume kind of went into those products, and what we see now is a very different curve, a very different bit of decay and everything else in those products. So maybe in the near term, that could possibly be. Of course, the hope is that it draws more people in, the proverbial grandmothers from Iowa who can't afford to even sell a 1 lot right now in like an Amazon or some of those other big names. But they could do a 1 mini, and that, of course, would get some more flow and get some more action, some more volume. Not that these products are hurting for volume now, but more could always be better. Mr. Rock Lobster, is this a concern for you if, as one of our listeners, I forgot who it was, supposed on the show on Monday that all these expensive tech names, maybe people want to bring back the minis. If the minis were to come back, do you have Tony's concern? Do you share that minis would hurt the volume in the main underlying options, sir?
I thought we tried minis once, didn't we?
We did, and it failed spectacularly. But people are asking about it again. These stocks are crazy expensive. I certainly understand why we're getting this question now.
And I do get it. Apple's cheaper. I mean, Amazon, and then what do you have? And then Booking.com is pretty. So they might trade. Yeah, sure, they might trade. But from a product point of view, from the liquidity provider view, because the only thing that really matters is their point of view. Because Like for retail, what you want doesn't really matter. As long as the product is fungible for them, they can provide liquidity in it. It's not the fact that it's a tenth of the size, there's no gamma. It's not even a problem for them. So on that score, I don't think it would hurt the liquidity as long as it's a fungible product, which I can't imagine they would list something that is, not.
Imagine if that's how they screwed it up this time. They said this is completely not fungible, what they listed. Given how spectacularly they failed last time, I wouldn't put any error beyond. That would be pretty impressive if they came back. We're going to do it again. We're going to do it right this time. Oh, yeah, by the way, they're not at all fungible with the main ones. That would be fantastic. That would be 2020 in a nutshell if that was the case. As we keep on going into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Yeah, these Apple Minis we're launching, they're actually a European-style futures option and completely unrelated to the main core product. That would be fantastic if that was indeed the case. And by fantastic, I mean awful. All right, let's see what we got. We're keeping an eye on for the rest of this week. I mentioned we have some big earnings popping off next week. We got all these move reports hitting the site as we speak, hot off the presses from our friends over there at Oriasland. Let's hit on a few because big names are popping off yet again soon, listeners. If you wanted Delta Airlines, they got it on the 13th. Before the bell, actually. They're at $32 as of this report. They were pricing in $2.13. In the past, they moved 72 cents. So a lot of extra juice on the tape there in Delta Airlines. You got a lot of banks next week as well. JP Morgan closing in on $100 as of this report. They were pricing in $3.83. In the past, they moved to $1.73. So pretty juicy out there as well. Let's see. Goldman Sachs, $203.60 as of this report. They were pricing in $8.25. In the past, they moved $4.50. A lot of vol in the financials. You've seen a lot of problems out there in that space of late, not the least of which with Morgan, record fine for spoofing. So some of that obviously being translated into the straddles out here. Let's see. United Airlines as well, $36.38 as this report. They were pricing in $3.08. In the past, they've moved $2.25. So a lot to unpack here, a lot to watch. You can check out that whole report for yourself over there, theoptionsinsider.com, as earnings season returns once again with gusto. Speaking of gusto, the Rock Lobster is always full of gusto. Mr. Rock Lobster, what are you full of gusto for as we head on into the end of the week?
Full of gusto. Well, of course, I've already did my pshaw about the vol products. Of course, I'm right as we're talking. I'm doing double duty. I'm pricing a No 13 Strangle in VXX right now because the potential crash in that thing is so enormous. I can't help myself. Thankfully, I have some dry powder to do it. The watching are we going to have some kind of a fiscal stimulus deal to get people over the last hump of this virus? Because I'm looking at the therapeutics. I'm looking at all this. The government, I think the lockdowns are going to stop here and people are just going to deal with it because hospitals aren't filling up. So hopefully that's the case and we get by it. And then we have this little thing called the election, and hopefully we'll have a peaceful transfer of power, and not be a banana republic, and we will move on. But as we said before on the other show, on Inauguration Day, one way or another, there will be a transfer of power, and the current president has no legal authority anymore. So you can get as excited as you want about it, but in the end, it's all going to be probably a tempest in a teapot as they count all the votes. I'm going to assume it's going to be like the hanging Chad days where you get some coffee and donuts and you watch all the people count the Chads. I have no clue on how this is going to work. But we had to make it complicated because people can't vote, but they can go to Walmart. So, hey, what the heck? So that's what I'm watching. But I am watching if these therapeutic stocks can make a move. Is this a real thing? Bank refinancings, I think there's huge. You can't even buy a house in Maine. They sold so many houses already. So I don't know if it's like that everywhere else in the country, but potential huge refinancings and stuff for banks could be a big earnings boom. So I'm feeling, besides the fees that those financials, we might get a little lift into the earnings cycle as I think we get a little closer to reality on that.
We're going to get a little lift into our next show as well. TWIPO coming up in exactly 28 minutes, or 27 now. Clock is ticking. So if you're interested in all things equity volatility, stay tuned. We're going to get into that in some interesting ways in a little bit if you're listening after the fact. Just hit next, but before we go, Mr. Rock Lobster, folks are intrigued. They want to hit you up about all this earnings vol or broad equity index vol or anything else under the sun. Where should they go? What should they do?
Go to optionpit.com, look at memberships, and then swing the wheel. Have some fun and learn how these option things work.
Learn how them options things work over there. Them thar hills of optionpit.com is the place to go. It's also send some well wishes out to Uncle Mike. Check him out over there. stcharleswealth.com is the place to go. Hopefully he's feeling better soon over there. On behalf of the Rock Lobster and the Uncleist of Mike's, why not? And indeed myself. I thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in such great and interesting questions. Keep those coming. Love to hear from you. Remember, if you like what you hear, keep those reviews coming. It does help new people discover the shows in these troubled times. And you can hear some fun stuff if you're listening live in between. Otherwise, we'll be back again in a little bit for TWIFO. Back again tomorrow for Volatility Views, noon Central, 1 p.m. Eastern. Back to the old time. And then it all kicks off again on Monday with another episode of The Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.